The first atomic bomb was dropped on Hiroshima.
Over humanity!
Fires of frustration and discord are burning in every
Let us not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
Oh, baby, it's cold outside. If you lived in the path of last week's winter storm, you know how fast things can turn from bright sunny day into a whiteout. 1 minute you can see the end of the block, and the next it's just wind, snow, and your weather app screaming, "Do not travel." But here's the funny thing. Inside the house, life mostly kept going. Kids turned the living room into a ski lodge. Somebody put on a pot of soup. Work shifted to laptops and coffee mugs. Yeah, outside looked like chaos. Inside was inconvenient, but manageable. I know, it's easy for me to say sitting here in South Florida, but I digress. It's also a pretty good picture of what the economy looks like right now. If you only look at the window of headlines, it feels like nonstop storm warnings, confusing Fed signals, noisy inflation reports, mixed earnings, political drama, all blizzard, all the time. But if you step back and you look at the structure, jobs still being done, paychecks still being earned, businesses still adjusting, you see something slightly less dramatic. Yeah, messy conditions are outside, but the core systems are still working. For your money, the question isn't, will there be another storm? Because, hint, hint, there will be. The real question is, what kind of house am I sitting in when that storm hits? Is your financial life built so that you can stay put when things get rough instead of driving your portfolio on black ice? So that you have enough insulation, cash reserves, sensible mix of investments, that you're not forced to make panicked moves in bad conditions, so that your long-term plan can handle a few ugly days without you tearing it up and starting over. Weather will always get the dramatic coverage. There's a reason they name winter storm warnings now. So will markets. Your job is to make sure that the next front, when it blows through, you're watching it from a place that's sturdy, warm, and well-provisioned, and not trying to rewrite your entire plan from the shoulder of a proverbial icy highway. After the break, I'll be back with this week's history lesson for the modern investor. On January 27th, 1880, Thomas Edison gets the patent when the light bulb finally goes on. For real. On January 27th, 1880, the U.S. Patent Office granted Thomas Edison a patent for his electric lamp, a design that could burn long enough and reliably enough to be practical in homes and businesses. And he wasn't the first person to make something glow. More than 20 investors had produced some version of the electric light before him. But their designs were fragile, short-lived, or too expensive to be useful for mass production. Edison's real breakthrough wasn't a single eureka moment. It was years of grinding experimentation on filaments, vacuum levels, wiring systems, and power distribution. And even then, the bulb alone wasn't the story. To make it work at scale, Edison had to build an entire ecosystem: generators, wiring, meters, and a business model that could convince skeptical consumers to swap gas lamps for something invisible, and to them, mysterious. In other words, the light bulb wasn't really about a gadget. It was about making a new way of living both practical and durable. Here then are 4 lessons for the modern investor from Edison's light bulb moment. First of all, don't confuse being first with being investable. Plenty of inventors made light or Edison. None built a system that ordinary people could actually use. Investors see this pattern all the time. A technology or product might be exciting, but that doesn't mean it's investment ready, or that you should bet your retirement on the earliest, noisiest version of it. Look, whether it's AI, crypto, clean tech, or whatever the next big thing is, ask yourself, is there a durable business model, real demand, and infrastructure around it? Or are we still in the nice glow, but it burns out in 5 minutes phase? Your retirement plan doesn't need to own every single prototype that comes to market. It needs to own what survives long enough to matter. Second, systems beat one-off bright ideas. Edison's bulb worked as part of a larger plan: power plants, neighborhood wiring, switches, and meters. Your financial life is the same way. One clever product, a hot stock, a sophisticated fund, a flashy tax move, they won't carry you if it isn't integrated into a coherent system. A savings habit, an appropriate asset allocation, a withdrawal strategy, and a tax plan that all work together. If you can't sketch your overall wiring diagram on a few pages, where money comes in, how it's invested, how it'll be taxed, and how it will come out in retirement, you may have too many bulbs lying around, but you don't have any real light. Third, incremental progress beats waiting for perfection. Edison famously said he hadn't failed, he just found 10,000 ways it didn't work. Between the mythology and the marketing is a simple truth. He kept moving. He didn't wait to understand every possible filament material before building a prototype. Most individual investors do the opposite. They wait for the right time to start investing, for the perfect portfolio, or for total certainty about markets, interest rates, or elections. Like Edison, you can improve as you go. But first, you have to get started. Finally, this week, think about cost, not just brilliance. Early electric light was astonishing, but expensive. Edison understood that if the cost per hour of light didn't compete with gas, adoption would stall. For investors, your version of cost per hour is fees, taxes, and avoidable frictions. A portfolio that looks brilliant on a chart but bleeds money in unnecessary expenses and tax drag may leave you worse off than a simpler, lower cost approach. Over a 25 or 30-year retirement, that friction can mean the difference between financial independence and running short. Don't just ask, what can this earn? Make sure you ask, what do I actually get to keep after costs and the IRS get finished with it? Here's my final thought for this week. Edison's patent is a convenient milestone, but the real story is everything wrapped around it. Thousands of experiments, a system built piece by piece, a focus on practicality and cost, and the discipline to keep going, and nothing really seemed to work. Your financial life doesn't need a single brilliant invention. It needs the same quiet habits. Test, learn, simplify, integrate, and improve. Over time, that's how you move from occasional flashes to something much more valuable. A steady, reliable light that you can live by.